You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. Today is that once in a while because I got a real doozy for you. My theme throughout this year is we are going to get news bombs left and right. We're going to get tariffs. We're going to get crypto news. We're going to get Trump news out of the wazoo. So far, all the news bombs that we've experienced these past 2 weeks, they've all been a big fade. DeepSeek came out. Market got shellacked. It came right back. Tariffs are announced. The very next day, we're going to postpone tariffs for 30 days. This is what we expect. Lots of volatility, lots of movement, and that's why we say we want to get on prints. When the market makes big moves, especially overnight, make some trades. We're already made a trade this morning that's up, Dale was saying 25% on a trade that he was able to capture. So pull up the sleeves and get a little busier and get on prints. Today, we're seeing lots of unusual option activity. A big advanced notice trade that I want to share with you in retail. And then we're going to look at a divergence after that advanced notice trade happened. So let's go over to the screen. I've got the questions up for anybody. We've already been chatting for the last 10 minutes. Thank you for joining. All right. Let's start here. I want to start with our vital tool. This is our vital tool that follows VIX term structure. And if we look at VIX term structure yesterday, now if I was an artist, I would draw a plate of pancakes because this is flat as a flapjack. Why do we say that? The 9D is 19.38. The 90D is 19.55. So there's just the same amount of volatility for 9 days or for 90 days. But what are they trading at right now? The 9-day is now trading at 17.37. The 90-day is trading at 18.77. Okay, so right now, 1877, 1737. There's a $1.40 difference between those two levels of volatility, as opposed to where they closed, they were flat as a pancake. This is very, very bullish with the front end of the VIX curve getting absolutely smushed. Our unusual options activity tool, we call this our advanced notice tool. What we're doing here is we are looking for the biggest orders in the market relative to a company's market cap. The thinking is if you have a $1 billion company and somebody does a $30 million option trade, that person knows more than we do. We want to give the benefit of the doubt to whoever's trading that kind of size that they know more than we do. So the name that stuck out to me today, AHCO. AHCO. Latest close. Bullish. If I click on AHCO in our advanced notice, it'll take me to this page. This page shows me the orders in AHCO that our advanced notice tool picked up. The orders are in January 2026. So there's time until expiration. Well, let's go and look at that trade. 34,405 times 100. If you times that 100, you're going to get 340, right? You're going to get 3.4 million. So when this order, when it's in the money, which it is right now, if it's in the money at expiration, this order is going to be long 3.4 million shares of stock. The stock market's been open today for an hour and a half. In the first hour and a half of trade, Atco has 154,000 shares on the underlying volume. Okay, 154,000. This order is for 3.5 million. Can you tell how bullish that is, how influential that is? That is a really, really, really big order. Now, there's been some activity out here. My guess is that they're playing strangles. They're playing for lots of movement in Atco, but traders want to be aware of these gargantuan orders. Atco, really, really wild. And this order is way out here. That is a large, large order. Somebody is definitely looking to do something in Atco. Here's the main topic of today's presentation. And I'm going to get into a trade talking about Dick's Sporting Goods. So I have Dick's Sporting Goods right here. There's $2 million worth of puts that traded in Dick's Sporting Goods, and that traded on yesterday. That's an order that we want to know about. Now, whenever we're looking for unusual option activity, okay, when I teach unusual option activity, we find those big orders, and after we see those big orders, we want to see what time were those trades done. Here's the big order, and those trades were done. I'm in Chicago, so this is Central Time, at 8:59 Central Time. Right there. Okay? After those puts were bought, the market makers who sold them the puts, selling puts is bullish, right? If you sell puts, it's bullish. They sold the puts. The customer bought the puts. When the market makers sold the puts, they were long delta, so they sold deltas. And that's why the stock dropped from 234 all the way down to 229. Now it rallied after that, but this was the order. This was the order that really mattered. They were buying puts in Dick's going out 365 days. Now, this is a daily chart on Dick's, and I'm going back about a year and a half. Okay? Dick's, it looks like, just in this range for a very long time, playing both sides of this range, whatever, not really doing very much, breaks out of this range, comes right back in this range. That might be bearish, okay, but let's look further into it, because Dick's, we have bearish, unusual option activity. This is a weekly. I'm taking you back 10 years now because I want to give you perspective. 10 years, Dick's Sporting Goods, retail company, not an AI company, not a tech company, a retail company, has grown since 2020, since COVID, from $20 a share, 10 times higher to $250. That's a really, really robust move, wouldn't you say? Maybe now is the time where it's making a big turn. It broke out, it came back in, who knows? But rather than just bet on Dick's Sporting Goods trading lower because we saw a $3.5 million trade, I think that there's a better approach. And the better approach this is out of order. The better approach, in my opinion, is going to be to find correlations. We want to find a divergence. We want to find some way to tie Dick's Sporting Goods down. Here is Dick's Sporting Goods, and the closest correlation that I could find after going through lots and lots and lots and lots of names is ASO. A-S-O. So a good trade that you might consider would be to buy puts in Dick's Sporting Goods. And to hedge that, traders may consider buying stock in ASO. Traders may consider selling out of the money puts in ASO. You can do that to play a bullish trade, but pretty good trade looking at the difference between Dick's and ASO. One more chart showing you going back to 2022. Again, with this chart, guys, I'm establishing the correlation. I am proving it to you or selling it to you that these two names are highly correlated. And if you like that idea of considering buying a put, to make the trade even stronger, you may consider hedging it with buying outright stock in ASO or selling a put in ASO. That was good. We covered a lot. Follow unusual option activity. That's what we follow in our Discord community, and that's what we share ideas. Everybody in our All Access, you guys don't go anywhere. I've been doing analysis on the VIX of the VIX. The VIX. That's what we're going to be talking about next. For everybody else, thanks for watching. We'll be back here live tomorrow.